Both job order and process costing assign material, labor, and overhead costs to products, and they provide a mechanism for computing unit product cost. Both systems use the same manufacturing accounts, including manufacturing overhead, raw materials, work in process, and finished goods. The flow of costs through the manufacturing accounts is basically the same in both systems. With job order costing, 1. Many different jobs are worked on during the period, with each job having unique production requirements. 2. Costs are accumulated by individual jobs. 3. Unit costs are computed by job on the job cost sheet. With process costing, 1. A single product is produced either or an continuous basis or for long periods of time. All units of product are identical. 2. Costs are accumulated by department. 3. Unit costs are computed by department. Can you select which of the listed situations will use process costs? Process costing is used for products that are similar and produced continuously. A processing department is any unit in an organization where materials, labor, or overhead are added to the product. The activities performed in a processing department are performed uniformly on all units of production. Furthermore, the output of a processing department must be homogeneous. Products in a process costing environment typically flow in a sequence from one department to another. Learning Objective 1 is to record the flow of materials, labor, and overhead through a process costing system. Direct materials, direct labor, and manufacturing overhead are added to work in process. When work in process is completed, the costs are transferred to finished goods. When goods are sold, the costs are transferred to cost of goods sold. In a job order costing system, manufacturing costs are traced and applied to jobs. One work in process account is generally used to accumulate costs for all jobs. Completed jobs are transferred from work in process to finished goods and then to cost of goods sold when sold. In a process costing systems, costs are traced and applied to departments that process the goods. A separate work in process account is maintained for each processing department. After processing is completed, goods are transferred to finished goods and then to cost of goods sold when sold. Let's look at the flow of raw material costs through T accounts and journal entries for a manufacturing company that has two departments, Department A and Department B. When direct materials are requisitioned for use, the costs are transferred from the raw materials account to the department work in process account, where the materials are added to the production process. As in job order costing, materials are drawn from the storeroom using a materials requisition form. Materials can be added in any processing department. The journal entry to issue raw materials to processing departments A and B is to debit the processing departments for the direct materials requisitioned and credit raw materials. Direct labor is transferred from the salaries and wages payable account into the work in process account of the department where the labor was added to the production process. In process costing, labor costs are traced to departments, not to individual jobs. Labor costs are recorded by debiting the work in process of the respective departments and crediting salaries and wages payable. Manufacturing overhead is applied to each processing department based on the predetermined rate for each department. Applied overhead is transferred from the manufacturing overhead account to the work in process accounts. In process costing, as in job order costing, predetermined overhead rates are usually used. Manufacturing overhead cost is applied according to the amount of the allocation base that is incurred in the department. The journal entry to record overhead cost applied to Department A and B is to debit the work in process accounts of the respective departments and credit manufacturing overhead. The cost of units complete as to processing in Department A are transferred into Department B for additional work. The transferred in costs from Department A are added to the manufacturing costs incurred in Department B. Once processing has been completed in a department, the units are transferred to the next department for further processing. To transfer the costs, debit work in process Department B and credit work in process Department A. After processing has been completed in Department B, the cost of goods manufactured is transferred to finished goods. After processing has been finished in Department B, the costs of the completed goods are transferred to the finished goods inventory account. The journal entry debits finished goods and credits work in process Department B. When finished goods are sold, the cost of goods sold is transferred from the finished goods account to cost of goods sold. Finally, when a customer's order is filled and units are sold, the cost of the units is transferred to cost of goods sold. The journal entry debits cost of goods sold and credits finished goods. In process costing, each department needs to calculate two numbers for financial reporting purposes: the cost of its ending work-in-process inventory and the cost of its completed units that were transferred to the next stage of the production process. The key to deriving these two numbers is calculating unit costs within each department. Key concept number 1 is that there are two methods for performing the computations. The weighted average method of process costing calculates unit costs by combining costs from the current and prior periods. The FIFO method of process costing calculates unit costs based solely on the costs and outputs from the current period. The weighted average method makes no distinction between work done in the prior and current periods. It blends together units and costs from the prior and current periods. The equivalent units of production for a department are the number of units transferred to the next department, or finished goods, plus the equivalent units in the department's ending work-in-process inventory. Key concept number 2 is conversion costs. Direct labor costs are often small in comparison to the other product costs in process cost systems. Direct labor and manufacturing overhead are often combined into one classification of product cost called conversion costs. Equivalent units is defined as the product of the number of partially completed units and the percentage completion of those units. Equivalent units need to be calculated because a department usually has some partially completed units in its beginning and ending inventories. These partially completed units complicate the determination of a department's output for a given period and the unit cost that should be assigned to that output. Equivalent units is the product of the number of partially completed units times the percentage completion of those units with respect to the processing in the department. The equivalent units is the number of complete units that could have been obtained from the materials and effort that went into the partially completed units. Assume Department A has 500 units in its ending work-in-process inventory that are 60% complete with respect to processing in the department. These 500 partially complete units are equivalent to 300 fully complete units. 500 times 60% equals 300. Department A's ending work-in-process inventory would contain 300 equivalent units for the period. For the current period, Jones started 15,000 units and completed 10,000 units, leaving 5,000 units in process, 30% complete. How many equivalent units of production did Jones have for the period? 10,000 units plus 5,000 units times 30% equals 11,500 equivalent units. Learning Objective 2 is to compute the equivalent units of production using the weighted average method. Smith Company's assembly department reported the given activity for the month of June. Notice that the department started the month with 300 units that were 40 complete as to materials and 20% complete as to conversion, direct labor and overhead. During the month, the department started 6,000 units into production and 5,400 units were completed and transferred out. Work in process on June 30 had 900 units that were 60% complete as to materials and 30% complete as to conversion. Start by calculating the equivalent units completed and transferred out in June. In the assembly department, 5,400 units were 100% completed and transferred out. Next, identify the equivalent units of production in ending work in process with respect to materials for the month and add them to the units completed and transferred out. The 900 units in work in process on June 30 were 60% complete as to materials for a total of 540 equivalent units. Adding the 540 to the 5,400 units completed and transferred out in June equals a total equivalent units of production in the department for June of 5,940 for materials. Finally, identify the equivalent units of production in ending work in process with respect to conversion for the month and add them to the units completed and transferred out. The 900 units in work in process on June 30 were 30% complete as to materials, for a total of 270 equivalent units. Adding the 270 to the 5,400 units completed and transferred out in June equals a total equivalent units of production in the department for June of 5,670 for conversion. Equivalent units of production will always equal units completed and transferred out plus the equivalent units remaining in work in process inventory. Here is a visual showing the computation of equivalent units as to materials. Recall there were 300 units in beginning work in process and 6,000 units were started. The equivalent units of production equals the 5,400 units completed plus the 540 equivalent units in ending work in process. Here is a visual showing the computation of equivalent units as to conversion. The equivalent units of production equals the 5,400 units completed plus the 270 equivalent units in ending work in process. Learning Objective 3 is to compute the cost per equivalent unit using the weighted average method. This slide details the cost of beginning work in process inventory and costs added to production in June that is needed to compute the cost per equivalent unit. Ending work in process inventory consists of 900 units which are 60% complete for materials and 30% complete for conversion costs. Under the weighted average method, a separate calculation is made for each cost category in each processing department. The cost per equivalent unit equals the cost of beginning work in process inventory plus the cost added during the period divided by the number of equivalent units of production. Total cost includes the cost in work in process on June 1 plus the cost added in assembly during the month. Total cost for materials is $124,740. Dividing the cost by the 5,940 equivalent units equals a cost per equivalent unit of $21 for materials. Total conversion costs of $85,050 divided by 5,670 equivalent units equals an average cost per equivalent unit of $15 for conversion. The total cost of materials and conversion is $36 per equivalent unit. Learning Objective 4 is to assign costs to units using the weighted average method. The first step in assigning costs to units is to record the equivalent units of production in ending work in process inventory, 540 units for materials and 270 units for conversion. The second step is to record the cost per equivalent unit, $21 for materials and $15 for conversion. The cost of ending work in process inventory is computed by multiplying the equivalent units times the cost per equivalent unit. The result is $11,340 for materials, $4,050 for conversion, and $15,390 in total. The next step is to record the units transferred out to the next department, which is $5,400 for both materials and conversion. The cost per equivalent unit, $21 for materials and $15 for conversion, is the same for ending work in process inventory and units transferred. The final step is to compute the cost of units transferred out, $113,400 for materials, $81,000 for conversion, and $194,400 in total. Learning Objective 5 is to prepare a cost reconciliation report using the weighted average method. The final step is to reconcile the costs. Costs to be accounted for consist of the cost of beginning work in process inventory of $10,039, plus the costs added to production during the period of $199,751. The total cost to be accounted for equals $209,790. Costs accounted for is equal to the cost of ending work in process inventory of $15,390 plus the cost of units transferred out of $194,400. Notice the two total costs of $209,790 agree, indicating that all costs have been accounted. Operation costing is a hybrid of job order and process costing because it possesses attributes of both approaches. Operation costing is commonly used when batches of many different products pass through the same processing department. End of Chapter 5.